Hey, what's up, everybody? October 31st. Yeah, you know what that means. Ooh, Halloween, everybody. But I don't want to interrupt the massive celebrations going on behalf of the little mama boys, dollar bulls here on this channel. Having an orgasm today because guess what? The dollar was up 9/100ths%. 9/100ths%. It's blowing through the roof. Yeah. And that's on a day that we had a much stronger than expected ADP payrolls report. Stock market was up almost 400 points, even though it closed up 240. Yesterday it was up over 400 points. Economy is strong. And the dollar index was up 9/100ths%. Wow, it is blowing through the roof. Guys, celebrate. Have your orgasms. You deserve it. You deserve it. But seriously, everybody, let's talk about what is going on now. Look, I got to tell you something. I started to see, or at least I thought I started to see in the data that I look at, some emerging weakness in employment and withholding tax deposits, which would be a barometer or an early signal of some weakness in the labor market. However, I have been saying that, number one, it's a little bit too early to tell because typically the first month of the fiscal year, there are very, very large distortions when you look at the numbers year over year, when you make the comparison. And this year, this October is no different. We had a big end of September in terms of government spending, where a lot of the early November payouts, things for like Medicare, Medicaid, military pay, veterans benefits, they landed at the end of September. So you had a huge September month compared to September 2017. So October looks a little bit weaker, but it's not really. It's just all because of that calendar quirk that I call it. So it's too early to really discern any particular year-over-year trend. I could tell you that with a high degree of certainty that spending is higher now than it was last year. And last year, of course, we had a record in spending. But the magnitude of the spending increase over last year, we really won't get to know that until probably well into November. November will smooth out some of these calendar quirks. That's number one. And clearly today, in today's ADP payroll report, didn't look like any weakness whatsoever. But, you know, we've had these divergences between the ADP report and the Bureau of Labor Statistics, the BLS report that's going to come out on Friday. And, of course, don't forget, Thursday, tomorrow, I will release my own forecast, which has been extremely accurate in the most important way, which is the degree of deviation from the consensus. In other words, where I have been very, very strong, and my subscribers will tell you, where I have been very, very strong is isolating or anticipating the degree of divergence from the consensus estimate, because obviously there's a consensus where most economists put out this is what they think. The amount of deviation from that consensus is really when you get the big movements in the market. If it comes in at consensus, then the market's like, all right, that was baked in, we knew that. But when you have these big variations away from what the forecast is, that's the thing that can trigger the movements, and that's where I have been very, very accurate. So I am coming out with that forecast tomorrow, as I always do, on the Thursday before the jobs number. If you want to get my email on that, if you want that, go to my website, go to pitbulleconomics.com and sign up for a 30-day free trial of MMT Trader, or you could sign up for a 30-day free trial of Zombie Trading. Zombie Trading, of course, is my daily Forex signal service. We predict zombie behavior, very easy to predict, and we front run the zombies. We take their money and we get out before they die. So yeah, Thursday, tomorrow, I will be putting out my number for the jobs report on Friday. If the jobs report is strong on Friday, and by the way, you had a nice, once again, rebound in bond yields. This number today, the ADP payroll number, absolutely keeps the Fed in play in terms of ongoing interest rate hikes. And yes, the dollar responded to that. Responded to that by rallying 0.09%, folks. I don't know if I could handle it. I don't know if I could handle being short when the dollar went against me by 0.09%. Oh no, how am I going to handle that? I'm going to stop myself out. So yeah, we have that. I also sent out today my weekly EIA petroleum analysis. The report came out this morning. A lot of stuff in that report. I always say that. You know, everybody reacts to the inventory number, and today was no exception. You had the zombies, and today's like a double zombie day. It's not just a zombie day in the market. It's a zombie day because, you know, it's Halloween. So yeah, you had the reaction by the zombies to the inventories, which we saw another build in crude. I think it was up 3.1 million barrels. But as I always say, there's a lot of information in that report. You have to know how to synthesize it. You have to know what to look at. I sent out my analysis of that if you want to get a copy of that. In addition to getting my forecast for tomorrow's, for Friday's jobs report, again, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader or Zombie Trading. Today's actually a great day to sign up for Zombie Trading, right? Because it's Halloween. So yeah, everything's on track. Everything's on schedule. You know, we're short. We've been short treasuries, and that's fantastic. Been knocking it out of the park. Along with other positions. And yes, the dollar is in a correction mode. There's no question about it. You're up, maybe 10% from the lows in February or March, April, actually. 10% correction. You went down from 104 to 88. You bounced up to 97. It's a 10% correction. If you go back and look at any long-term trend in the dollar, in the Forex, any Forex market really driven by policy, you'll see that you could have multi-month corrections of double-digit magnitude. It's absolutely, absolutely normal. Absolutely normal. And if you look at the dollar index, if you really look at the dollar index going back to its inception when I think the Fed first started publishing their dollar index against major currencies going back to 1973. You can get that online. Dollar's been in a downtrend for that whole entire time. So I suspect that that trend is going to stay in effect until one day in the future, if it happens, the United States may, as a result of its own policy, and it's something that I predicted, will eventually remove or cause the dollar to be removed as the global reserve currency. It will, the United States will end up running positive trade balances, trade surpluses, and the dollar will go up. But until that happens, and that's a long way from happening, the primary trend, which has been in place for, 45 years, that's going to remain in place. All right, everybody, notwithstanding rallies every once in a while. I mean, that's normal. All right, have a nice and safe Halloween. See everybody tomorrow. Don't forget to go to my website, pitbulleconomics.com, if you want to get a copy of my forecast tomorrow, and if you want to get a copy or an email of the EIA report today. Bye-bye.